This is London with Bitcoin Spike and VIP Trader. We have a hot open incoming, guys. We're going to look at Tesla, which is skyrocketing, doing very nicely. We'll talk about why very quickly. And I want to remind you, former hedge fund owner, Duke University, Harvard Business School. Guys, not SEC, not financial advice. Let's dig into Tesla as well today. We will dig in and look for some trade ops or opportunities. We'll look at Bitcoin, of course. I'll walk you through also a few details on the automatic pattern recognition system that is built into TradingView. So all of you, our VIP guys, particularly who have access to our charts in the back, etc. This is our trade room in the back. Congratulations to Venus, who's trading the lights out. And guys, everybody, J Mac, all you guys who are trading in the back. Let's talk about Tesla very quickly. In terms of an upgrade from Morgan Stanley, I want to shout out to all my buddies at Morgan Stanley. I call them my workout buddies. We work out at the same place here local. What's up, guys? They will recall, without a doubt, that I brought to them the specific bull flag on Tesla down in this neighborhood. Excited to see that you guys, I encourage you to hold on to these positions here below. We have rocketed up, given an upgraded valuation by Morgan Stanley. This will be the open, essentially that yellow dotted line. We're just going to be below a specific short line that we have designated on the 4 hourly. So this is a nice open nearly directly into our specific short line there on the 4 hourly, our golden short. That is part of the dynamic in play there is fire and ice kernel regression calculative. Also, we're just nearly at an upside target, bam, right on our upside pro line on the daily. We have the open. And let's take a look at that 4 hourly. We'll dig into NVDA, etc. as we look at, I want to get into the micro on this. Let's get into the micro and look at the action here on Tesla as it develops into some hot trading going on. Looks like guys, I'm on the 1 second right now. I want to see how price develops with this open up 6%. Given that upgrade, NVIDIA up 1.2%. Let's see, back off just a touch into the 5 seconds, see if we can get just a bit of perspective in terms of the direction on a move like this. It can sustain, it can traject up. We don't want to become bullish after the bulls have just made some good money, right? So that would be the notion there. Let's back off a touch here. Let's reframe back into where we are at on the daily. Looks like our upper pro line is holding for cash. Boom, nicely done. Nice to see fire and ice in action. Now, in terms of that level, you'll see on the daily, let's switch back over to the 4 hourly. Just want to let you know in terms of the assessment that is ongoing, you'll see our short line has pushed to the upside. Boom. And look at it crawl just in terms of the top side band for all the VIP trading. I want to let you know this is the specific target to the upside that we frequently mention. That's going to be the standard deviation to the upside. So about a 1% move if you hopped in short. The good thing about BTCC, if you had guys, if you had already set up, that's the exchange that we like to trade on. If you had already set up a short here, you would have activated at this price and boom, you would have just made a 1% move, even though we were long essentially, but that specific price would have picked up to the upside. Now let's dig in. Let's just take a look real quickly at NVIDIA. Sitting right now on the specific, looks like, and I'm going to reload this page. Let's reload this page and let's get back over into Tesla. I just want to make sure that we reload. TradingView has a new, just mind yourselves while we're going through technicals, TradingView has a new level of membership. That new level of membership is $500 per month called the ultimate level. And yes, pay attention. There may be some hiccups or some differentials in your standard. We have the I think the second to highest, but we're evaluating that ultimate right now to see if it's really necessary. So we'll continue to do that. I'll continue to do that. There are some features the $500 plan in TradingView does not have, without a doubt. So in terms of that, I'll continue to evaluate and bring you the best that I can in terms of where what we're looking at. Let's dig into the level right now on NVIDIA. Looks like the hourly 20 moving average is in play. Okay, we've gapped up on NVIDIA and Tesla. Let's take a look at Bitcoin real quickly, and I want to highlight some feature very particularly for you. This is Bitcoin Spike. We love trading Bitcoin. The volatility is there. Taking a look at the automatic pattern recognition on TradingView right now. I want you to know you can go to your indicators, you can go to technicals here, go to indicators, technicals, go to patterns. You can click on all chart patterns. This right here will assist you. It will only assist you in identifying automatic patterns that are there within the market. If we were to look at Bitcoin right now, it's telling us we're in a bearish pennant, potential breakout to the upside within a falling wedge on the 5-minute time frame. I'll caution you that some specific patterns will be missed by this automatic detection system. For instance, on Bitcoin, we'll flip right back to Tesla. I know everybody's hot on Tesla. Let's look at Tesla, which has identified a bearish pennant right now. These can be a bit dangerous if you're just trading blindly into the pattern recognition system. Please be advised. You'll also get some different patterns based upon what you're looking at. This is actually Taiwan Semiconductor. Let me bring out this. Hold on one second. There we go. Let's bring out that tape so I can make sure that I'm seeing the differential there. Let's go through Tesla very quickly in terms of what we are. We are at 5.68%. There we go. Looking at Tesla, we're showing an inverse head and shoulders, and this is what I was looking for. Here we go. Sorry for the delay. Pardon. Apologies. We're showing an inverse head and shoulders right now that is in the process of breaking out. Now, this is a valid pattern, for instance, that you're showing on the specific trading view auto detection that all patterns. I just want to alert you to the fact that you need to be able to apply your own pattern dynamics. You just need to be able to apply them. This can be an assistive, I'd say, functionality of trading view. I just wouldn't rely on it 100%. Now, what's nice to see is the following. What's nice to see, what we like about this chart, given the fact the work that we do in the back, the work that we are accustomed, what we're accustomed to trading, is we like this specific pattern quite a bit. This is an indication, and I would say it is a, what would we call it, guys? A bump and run variation or expanding leading diagonal. And the reason that we like them is that they have a high probability of, what do they have a high probability of? And you guys know this in VIP. It's essentially a very high probability of getting, hey, what's up, Tony? I just see Tony. Shout out to Tony. What's going on, Tony? My man, Tony. Nice to see you, Tony. We just covered that specific, and Tony, guys, is VIP. We're excited to see him this morning. And in terms of, Tony, you're up at the right time, being overseas. Shout out to Australia. Tony, you know this pattern, expanding volatility to the downside. Now, we have an expectation of getting back to, this is the 30-minute on Tesla. We love to see this rock to the upside. We're also, personally, having traded so many of these, each and every one of us is cautious of this area as an entry. Without a doubt, if you trade enough of these, on the whole, you'll see these like to bust to the downside. You just will. That's not my opinion. We can take into account the upgrade now with Tesla. This is the Tesla chart, but looking at this with the combinant, we'll look at this inverse head and shoulders. We just have to note that a lot of these like to bust. It's not an opinion, it's a fact. If you trade these a lot in VIP, you're known for trading, at this point you've traded 200, 300, maybe 500 of these or more, maybe up to 1,000 of these specific patterns, so you know how they work. It's not a matter of opinion. We're way past opinion. We're down to knowing exactly how these function and the fact that this is a dangerous, dangerous entry. We'll call it a dangerous entry on Tesla to assess the pattern dynamics, which will also be in play on every asset we trade, to include Bitcoin, to include Solana, guys, Doge, ETH, XRP, SHIB, Matic, whatever be your choice, okay? But the important part here is not only is this a potential risky entry because we are seeing this expanding volatility like this, and where do we know that orders are placed? All through this zone. So as we're looking at this, and what would be one of the dynamics in play immediately, just to assess the approach, the technical approach here is going to be something like this. Absolutely. Anytime you see that parallel carry up opportunity, boom, boom. And that looks to be essentially on some variability with the line to specific, which is a specific pivot that's brought into play here. We're seeing that that is a dynamic, that parallel carry up that's nearly being perfectly reinforced at that point as well. So looking at the targets, these targets are good, guys. These targets have been, I'm going to say we're actively testing the targets. Let me get back to what I was saying, though. I just got distracted by the targets. Reinforce this in terms of any breakout trading. Right now, the market is up, right? We're at 5.76%. It looks like that NVDA short line did pay. That interaction with that 20 moving average looks like we did succumb to that in addition to our fire and ice short lines. Nice move. But I want to highlight on Tesla, one of the issues is you're looking at a breakout trade. If you can avoid breakout trading, you're going to be fine, guys. If you can learn to pre-position ideally within a pattern, give yourself the opportunity to roll to the upside. However, this is a tricky scenario for the reason that we know the expanding volatility to the downside. And what do we need along with that expanding volatility, which is very clearly demonstrated? It is this lead in, this bump and potential run. Okay, that is the lead in of the bump and run. This would be the bump, and then we would like to see, boom, the run to the upside. Please pay attention. What makes this a bit tricky as well is not just a confirmation on that specific bump and run pattern, the bell pattern formation. We call them bell patterns because of the shape. We rock the bells in VIP, you guys know that. But also, if we're going to take TradingView at its word right now, let me clean this up just a touch. I've got another indicator that's about to hopefully be finished up this week. I saw some traders having some problems with multi-time frame analysis in terms of the specifics on Bollinger Bands. So that was my key in terms of just finishing out one more indicator here. Looking at the inverse head and shoulders though on Tesla, what are we certain of right now? Well, we're certain of the fact that the entirety of the market is looking at a potential return to this neckline. Now, is the neckline exactly as TradingView has it lined out? Maybe not. The neckline could be a little bit below here on Tesla. You see the green dotted line here. Let me hide that Bollinger Band so you can see a little bit better in terms of the pattern dynamics. This is where you need to be aware, be alert of the fact that TradingView may get a lot of these right. Okay, it may auto draw perfectly. Typically, the auto draw solutions are complicated. They just are. So as we look at a differential from a potential line to a candle wick to a variable shoulder on the candle wick, just be prepared that not only may we draw some downside pressure in terms of a preceding level of resistance being effectuated as support on this line and pattern that we are respecting, that we're accustomed to, that it may also have some variability to it as well. But given the nature of the inverse head and shoulder in play and the level of variability, whether it be on the lines or the candle wick. So first would be, let's roll through this, make sure I'm clear. First would be a consideration of a potential move to the downside to pick up orders that are stacked along this level or lower. You got that right, okay? In terms of the potential, and this is caution on a breakout trade, a flat out breakout trade. We'll dig into the micro and take a look at that possibility here in a moment if that's what you're itching to do. But also, in addition to the expanding volatility, boom, those pick up a long preceding level of resistance, etc. We would be looking at the specific retouch on the neckline, which we're just in the process of breaking out per that auto indicated feature, but I can immediately right here we can designate a different neckline. So do be cautious that there may be orders below this specific neckline down in through a variable pattern that may not be auto recognized. You see kind of the peril here, not only of a breakout trade and the variable levels we can get to of pattern identification, what is relevant, but also the specifics of the auto draw. I don't want to knock it. I think it's a great accompanying tool for your skill set in the market without a doubt. However, just be aware of this 1-2 combo that has got a lot of traders along this level of resistance irrespective. So to pull into Bitcoin real quickly, let's take a look. We're nearly in a descending triangle. You know that on Bitcoin, just before we go back to Tesla, because that's hot right now, guys. We want to dig into Tesla. I don't want to miss that. But for instance, on the auto draw function, I brought this up to you guys in the back. But for instance, the auto draw is not exactly going to give you the descending triangle that is in play. I want you to please be aware of this descending triangle. The auto draw is not going to capture it. Call it a half diamond, if you will, the triangulation as such, or stretch it back into this zone here, and please recognize the descending triangle framework, flat bottom support, descending line of resistance. That's hot on the ticket, okay, in terms of Bitcoin. So pay attention if you're trading Bitcoin. That is typically a bearish indication, a descending triangle. They can work out as a flat bottom, but just be prepared. Let's take a quick look on this auto identification for NVDA, guys. Let's take a look at this. Now we're seeing a bit of a flat bottom. I don't mind this tool. I really don't mind this tool, except for the fact, again here, and this is TradingView built in, their new hottest, latest, and greatest. We have a flat bottom. It's drawing to this right now as that implied, and I don't really mind it, guys, but this specific topping formation, you will find that this tool wants to draw to an actively developing level of support or resistance, okay? So this happens to be valid here in terms of a topping formation possibility, right? But I would pay attention anytime that you're drawing, for instance, level of resistance. I'm fine with the specific double top, without a doubt. What I'm not as comfortable with, and you know where I'm going right now, would be the designation of a falling wedge with a descending level of resistance. Why? Because we have an active target right here. We have an active moving target that's being used as a pivot in a line construction. So to me, this is a deficiency of trading view of the all patterns drawn. You understand the specific level of support that's being drawn to an active target, okay? That's a big deal. Pay attention. You see that because we ideally want to set the pivot resistance, set the pivot support, set a pivot resistance on this falling wedge dynamic in play. So the fact that we are in an active candle and we're drawing, or it is drawn through a level of support, to identify a bullish pattern, be aware of the requirements. Set the pivot, guys. On resistance, set the pivot. On support, what do we need? 2 more pivots set on resistance. Another pivot set on support. 1, 2, 1, 2. Set pivots on. And we need 2 set pivots on each specific line of support and line of resistance to validly identify any falling wedge, guys. So taking a look at things, I'd like to, and shout out to Venus. Good morning. Hope you are doing great, Venus. What's going on, Venus? We are trading. Nice to see. You here this morning. It's a pleasure to have you here this morning. In terms of the details, let's dig into Tesla. Let's see where Tesla is at. And of course, it's nice. And as we knew, the one thing important here is that we knew we were going to be opening up on some fire and ice lines. Without a doubt. We knew we were going to be opening up. We were pre-market on and able to designate, well, Tesla is essentially going to hammer into some of our pre-designated short lines. Okay, now, not a huge deal, about a 1% move off of said lines in terms of what paid, though. Fire and Ice did pay this morning. So a blind, a blind application of Fire and Ice this morning paid. All right, and it's easy or difficult. You can argue either or to jump into the arena with the emotions, with the talk, etc. that's going on. But in terms of that, a blind application of Fire and Ice has paid. Tesla looking like on the 32nd, this is some tight trading, looking like picking up in this flat bottom descending. So this is kind of the way that the market is treating the traders this morning. What is this? In terms of, and for those of you with downside exposure right now, meaning you have a lower entry on Tesla, congratulations. That's awesome, guys. This is VIP, way to be, way to trade. Now, looking at this, when I say that this is just kind of the way that we're being treated this morning, we've got a flat bottom support here. So bulls are not excited about this breakout per se. Given the upside, 6% price action to the upside, what we don't like about this is a near flat bottom. We don't like to construct flat bottoms on the way up. Real bull moves will do it, but the biggest joke in VIP, and we just like the joke, guys, is like, what do you want to do all day long? Sit around and trade breakout, descending triangle breakouts? It's our biggest joke, guys, because typically a descending triangle, we really prefer one, don't we, on the way down. We prefer a descending triangle on the way down where we get at least the chance to explain to our friends if we missed the trade, or to dig up in a book some verification that, well, look, it's not a descending triangle, it's a double bottom. Boom. We can take that. But on the way up, we're just not as excited about it. You guys know that. So we have learned to be cautious on descending triangles, particularly on the breakout to the upside. It is a novice trader who wants to get involved on this move to the upside at this point, and you'll just see the washout at that level. So we're in some detailed framework here. Now we do have an ascending line. We'd start to balance that, of course. Mind yourselves, if you find, and we have an ascending triangle, we'll note that on the 15-second, guys. Ascending triangle. Let's go ahead and look at the specific carry up feature. If we can pop this bulls, is it worth trading? Where are we at here? Mind the flat bottom to the downside. If buyers can get up and over that 263, probably 263.7, we're looking at a potential 0.99% move. Now, what I always do, you know this. Now, mind yourselves, we have a double bottom. This is how the traders are being treated on some big news, okay? Those who pre-positioned did well. In terms of the specifics here, I'm always going to lay out 2. For myself, in terms of my consideration, I'm going to lay out 2 levels in terms of me assessing whether or not, and much more quickly than how I'm explaining now, but internalize this and apply it more quickly. I'll go through it at a level that you can understand it. I want my extension targets to the upside. I want to know, given the specific max probability of a 50% move, a 50% move completion of any pattern to the upside within seconds. I have already designated the approach that this specific 50% move, you'll see that 50% move right here. If I can get this a little bit larger, let me do this. Let me get in and actually increase the text size if I can. Yes, okay, so that 50% move here is something I'm ready to calculate into immediately to determine whether or not this trade is going to be worth it for me to trade. Understand, the max probability on an ascending triangle like this is going to be what? Going to be the specific 50% level. So immediately within a split second before I can think about drawing it on the Fibonacci extensions, on the specific, right? And pay attention, guys. Whether or not, and before I've drawn Fibonacci extensions, whether or not, and before I've drawn this line showing an amplitude, or whether or not I've literally, pay attention, whether or not I've literally drawn a percentage marker up here of 0.5%, number one, then drawn a percentage marker up here to the 100%. Before I think of the complication involved for myself in drawing this, it's gonna be element 1, drawing this element 2, drawing this element 3, and drawing this element 4, really on top of drawing, let's just call this the ground zero, boom, here in terms of element, we'll call it element 5. Before drawing all of that, what am I doing as a trader? I am mentally constructing all of this. Please pay attention. As a trader, I am mentally constructing all of that, okay? My best tool in this fight is the following. I will take the bottom to the top on this specific feature, which is what? Which is a price range tool. I may apply a price range tool. I probably will not, in terms of my approach, I will not draw this specific price range tool even to the amplitude here to carry up the price range tool. I probably won't waste time doing that in terms of the entire amplitude here. I won't waste time drawing that up. What I may do is I have become proficient enough, you're proficient enough to look at the pattern, recognize an ascending triangle, to draw through the midpoint up, bam, click 1, 2, and 3, boom. I know right there what pattern I have in place. I know I'm right at that 50% carry up. I've estimated that 50% carry up. It's fine if I'm a little off, but I want to designate down here in terms of a price range tool. I want to throw this up in terms of trying to capture, let's say, a 50%, boom, mid-level of this range. Okay, then I want to, and this is just one tool instead of 5 or 6 that I have to absolutely recreate with the time. And guys, it's going to set you back when you have to go through all that framework of technical analytic application. The guys who are going to do this are going to throw into one tool instead of 5 or 6 tools, right? We're going to literally, what we want to do is designate this range. Bam, I want half this range. I want to carry it up. And I'm fine if I'm off 0.4, 0.5, point whatever, 0.04, really 0.05%, etc. That's fine. I can go back and recreate if I have the time. But out of the starting gate, when you see while I'm producing this information for you, do you see, right? And Quick Hands had the ticket, right? This is why I'm going to try and stay ahead of that curve, right? Because by the time that I've drawn out all of this, and you'll just see, where did we get to, guys? Where did we get to exactly on that 50%? Do you see how critically important? This will be the question. As you get better at your technical application, pay attention to the following. Most people think that it's going to be that you're going to get better at drawing your Fibonacci extensions. You're going to get better at identifying your specific patterns in play. You'll get better at understanding what the data range tool is or the price range tool, right? You'll get better at clicking and maybe changing the color quickly. And maybe you'll get better, guys, like we did. And now I need to change the font size. Please pay attention. This is a very important instructional, guys. I'm speaking to myself, preaching to the choir, I know, with you all. But wow, I can actually adjust the font size on my specific on my specific Fibonacci extensions, which now I know how to apply, right? No. Your advancement in technical analysis is going to be what? Your ability to look at a chart like this, okay? To look at a chart in a framework like this on Tesla, on the tail end of hot news, and what is the 1-2 punch that you can apply in this zone and bam, carry to an upside with a level of proficiency that you're going to give yourself the opportunity to have more time to engage with your trade and to skip all of this. But all of this still be constructed appropriately in the framework of what you know is there. You can skip the levels 1 through 5, meaning everything that's on the screen, and you're going to get more proficient at just drawing, let's say, a circumvention or a workaround in terms of the technical so that you can engage in your trade. Now, when you become more proficient and accurate quickly doing that, then you're in the ball game. Then you're talking. Then you're not just working on your technicals, guys. They're not operating as a hindrance to you. You understand? There's a big difference between saying, well, I understand how to draw an ascending triangle in TradingView. I understand how to draw a price range tool. I understand how to draw the Fibonacci extensions. I understand the amplitude carry up of an ascending triangle and that it will match up with the 100% on my Fibonacci extensions. Guys, that's required. That's going to be required. Your real skill development in this ball game is going to be as you quickly circumvent, as you bypass all of this, and as you're trading, guys, this is on the 15-second chart. So for you to be able to designate into all of this information at lightning speed, your proficiency at technical analysis is, instead of drawing all of that, you're going to pick tool 1. Bam, you're going to say half of the amplitude of this specific ascending triangle, which you know is there. I'm going to stack this on top. Is this worth it for me to trade? When are you asking that question? When you're here, right? When you're right in this zone. You're going to pull up a half amplitude measurement tool, your specific, great talk, huh? You guys got it. Price range tool, right? You're going to pull that up into the equation while you're looking at this specific ability to put, guys, let's just, you're already into the, we need to stay over the 20 moving average. We've got an upside target. We have all those issues at work, but your ability to synthesize these technicals, to identify half of the range quickly, expeditiously, guys, efficiently, and as accurately as you can get, when you become more accurate on this specific carry up here, and you're not distracted by talking to someone or not, or you're not distracted by how does this tool work again? What if I want to change the shade or the color of this tool? Well, what if you guys get it, right? So we just saw the hit into the 50%. Some traders, you have to understand, traders were in, traders were out, traders were back in, traders are still in. So while you're working on the proficiency of your technical analysis, there are guys and girls good enough to boom, all they see is a pattern in play. You guys got it, and you're doing it, right? But this is a good talk in terms of the specific amplitude, bam, 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 wherever we're at in terms of the hit, in terms of what's required for you to develop that proficiency. Okay, which time frame are you most proficient or consistent at? The key focal here is we need an amplitude carry up, but what do we really want? We just want half of that. We just want half of that carried to the upside, and that tells us in as quickly as we can, with cutting through all the other application requirements, all the other TradingView issues, that yes, bam, this is going to be worth trading. It's a 0.5% move. I can make that, given the spread, given the difference between the bid and the ask, and my entry costs, my trading costs. I can deal with that. I can trade that. And not just that, then you're getting to the point I can trade that, I can reload, and that's the next question always. On every breakout, what do we ask in the back? Where are orders being stacked, right? When some people are just trading and breaking out, the big question that I always bring up to you is, where are orders being stacked? Period. Because we know that max probability is, what's happening at that max probability? At the max probability, that 50% that we just hit into perfectly, right? That we hit into just, guys, perfectly. Boom, that 50%, we know orders are stacked below. Not just on the resistance, we see, guys, a nice completion to a downside band target. Bam, standard deviation. just hit, nicely done, nice, people are trading. You see this, so it's a nice dynamic to get through. It's a nice dynamic to see essentially what can happen at the top of your game, period. We're at the 15-second. It's been a beautiful demonstration in terms of kind of that next level you can look forward to, and you will just find that the more that you are able to concentrate on issues like this, the better you're going to be, bottom line. So at least we can bring it up today for you to say, okay, what's going to be required for me to focus like this, to be able to pinpoint with accuracy the specifics here without spending too much time. And you'll see that, you know, there is a way to participate. If you miss the breakout, if you decided to re-engage lower, and we did ultimately make it up to that, where are we at, the 86? This is the classic 86? Pretty much we're at 90% to target. Okay, so we have a different discussion ongoing there. And this is one of the reasons as I stream live and bring you sets of information to consider, you have to understand in terms of maximizing my proficiency in the market, my technical application in the market, that there's a deficiency between me explaining things and actually going through the technicals, much less trading. So there is a challenge in terms of what's being communicated. I'm talking to you guys, you know that, you guys and gals. In terms of that, it's for me understanding if I'm going too quickly, if I'm not going too quickly, whatever's occupying you temporarily in this just melee, this nice challenge that we have to operate with the markets. I just challenge you to look past your standard technical applications, to look past and you're getting it now. There's more to this game than just finding the right chart and the right pattern. You got it. Then just being told what exactly is going on in the charts right now. Guys, you can give a high schooler, and we have, and they have. And I was probably one of their experimentation projects. I promise you, as a high schooler, you can give this information to a high schooler who's going to be able to pull out the chart patterns and show you targets. That's not the rocket science. That's not the brain work, guys. It's just not. And look at TradingView has just completely dispelled, for the most part, any what do we call them, guru on the market that's going to tell you this perfect pattern that, well, look at TradingView. Again, under the indicators, going to technicals, all chart patterns. You can employ that now with the risks that we noted earlier. But it's not about the pattern recognition. It's not about the specific guys, the guru who, even me, is going to tell you, ooh, this perfect pattern in play. This is easy stuff. We can start up an AI, guru channel in 2 seconds with these on it. It's great. We appreciate TradingView doing that, but this isn't the element of the game you should worry about. The element of the game you should worry about is your specific level of exposure. Absolutely. How exposed are you on a trade? How quickly can you get in and out of a move? Forget the seance guys, or that too, especially, but whatever we say, the guru. Forget the guru. The guru's right here. It's staring at you in the form of the auto pattern identification. We agree? I think we agree. I don't think I misspoke on seance, whatever it was. But forget the guru. I don't think that those things are connected. By the way, I know enough guru stuff from India, I believe, directly, that I know that they're not connected. So apologies to anyone who may have been offended in that specific. Golly, that's as politically correct as I can be about the nation of India. Now, looking at the details, though, what does this tell us? Okay, if you're looking for the easy answer, you got it. Let's say that. If you want the easy answers, if you want the targets to the downside, you take this auto chart pattern identification and do what? You add in momentum. Do that. Add in momentum and add in RSI, much less our fusion or whatnot. Go ahead and add this in terms of just a few indicators on top of the patterns that are in play. You got it. But what don't you have? What you don't have, and this is great. This is great stuff. You'll see our fusion indications right now on NVDA on the 15-minute. We've been red. Right, this red indicates we're negative in terms of MACD and RSI featured engineering relative to our machine learning. Okay, that is a specific. I'm viewing on bars. We're red, meaning we're under on featured engineering, MACD and RSI on NVIDIA. All right. So as we look at this morning's been a great example of the additional high-level trading tactics that you're going to employ that don't just have to do with the basic parameters of TradingView, guys, that don't just have to do with the basic elements that are really presented for you now. So that next level is exciting, isn't it? It's kind of cool to know that there are people operating as quickly and beyond the standard technical norms that you're seeing. And I know you guys have that down. I know you do. You can work with this enough. And so on the initiation of the auto pattern identification has been a great and intentional, just say by me, intentional opportunity for you all to dig more into your technical game, right? To see how you can up your technical game even more. And that's what it's all about. Let's zoom out a minute. Let's take a look at where we are at in terms of Tesla, which again got the upgrade on and amidst quite a bit of controversy. Amidst quite a bit of controversy this morning on CNBC, a lot of negativity expressed flat out on the individual who made the flip on the call to the $400 price target. Now, a lot of us don't care. We have underwriting Tesla position, right? We have that in terms of carry up potential. We're fine with it. But what did occur was the analysts who flipped to the 400 had been a bear, hated it as a car company, talked about it to the downside continually as a car company. Now all of a sudden, as an AI company, however, is going to make his mark. So this was a very, very well, guys, just well-crafted, what would I say? Well-crafted in terms of the technical parameters. What I like about the call, this is what's nice about the call. And let's dig into a target that we might clearly be able to designate here from this move. What we were looking at, and you can see it again as I just walked through that on the lower time frames. What can you see without pattern identification? Now, the danger here, if you're using TradingView pattern identification, is you may see something and then it's not. It's just not even existent, right? As you were to look at this, what's the pattern that you see? You guys get it. You see a specific flag here, flag potential, or a pennant, and here you see a nice pennant. You see the symmetrical consolidation here, without a doubt. So we've been parked in a pennant, right? The pennant is important because we have the expectation, even on the breakdown, you know this, even on the breakdown, we have an expectation of a potential catch into a flag, just via the property dynamics, let's say the target dynamics of the specific symmetrical triangulation, right? New York Institute of Finance, what is the natural expression of the target? And on these automatic functions here, you need to be careful of targets. Some of them are great, others of them are distinct. You're not going to catch a specific flag fall out, for instance, of a specific symmetrical triangulation. You have to know these things going into it, okay? You're ahead of the curve, the fact that you do. So looking at these dynamics to reinforce again what we liked about Tesla, what I liked about it, and you couldn't miss it if you looked at the charts, the same way that we would have pre-applied more quickly without all the technical, when time is of the essence, when you're really into the trade and making those flash decisions, this would be something that you don't necessarily need to draw out, but it's screaming at you, right? It just really is in terms of the dynamics there. So we can call it a day if we like. We can kind of know where we're at. It's been a good talk this morning. Glad to go through that talk with you. What are we seeing here? Interest along our lower pro line on the micro. We're just on the micro with Tesla. In terms of that, Fire and Ice has done well. Afforded an opportunity to short early, pick up. We got into the double bottom versus, excuse me, the double bottom versus the double top argument, and ultimately we did traverse to the upside. I want to shout out and just congratulate anyone who is trading. That's the name of the game. Let's see what we have here on the 1 minute, on the 30 second. We'd like to see, I hate to say this, I personally would love to see an additional return to this level. We had a confirmation here. This is where it's getting tight, and you know this. If you're flash trading, if you trade a lot, you already know where are orders? Stacked, okay? Where are the orders? They're stacked at a preceding level of resistance. Promise that we'll get there? No. But orders are stacked at this level. You understand that without a doubt. So let's look at nice opportunities, nice trade ops. We would call them ops, just meaning opportunities to trade this morning. Way to go. And we're just parked at this preceding level of resistance here. You're getting that, you're definitely getting that that indication. If you're looking at your 4 hourly, it's like, we really need to bust this. Let me change on settings. Right click, hit settings, go to symbol, and then you'll be able to switch from integer to 2 decimals. Okay, if you lose your decimals here on the right, very important on TradingView, it may be easy or not for you. You may have that down, but if you're not getting the decimal feature on the right-hand side, right click, hit settings. Okay, right click, hit settings at the bottom. Then you want to, under symbol, click on precision, and precision will take you to either integer, which is a whole number, or 2 decimals. Okay, so if you lose the specifics on your decimals, guys, you'll know where to pick that up. So we're at this, guys, a natural level of difficulty here to the left. That's what's going on with Tesla, but way to rock it nicely to the upside. Excited for any of you that have. I would tell you this much: if you had a heck of a move here on the specific breakout from that trade that I brought to you, okay, and maybe you knew it. You kind of looked at it and say, I knew it, London. No problem. I'm more excited for you if you just knew it. I don't care. But just to document, that was a great trade opportunity in terms of this, and you held your long through this, and you're getting down through this, and you're back up to here. That feels good, guys. Congratulations. If you held this amidst this, because I know without a doubt, and taking profits, locking in profits, etc., we've been through all that. Like, man, I'm only 10% up. I'm only 10% up. The issue that you're dealing with is you had a likely or hopefully a much heavier level entry here on this bull flag, without a doubt. They can be difficult to replicate while the market is flushing traders out who didn't participate in this zone, okay? And I will normally state that this is an area where you have, I don't want to say break even. If you've taken profits or locked in profits, beautifully well done. Where would you ideally, let's ask this question, where would you ideally have liked to start releasing some of your shorts from a profit lock-in phase? If you decided to lock in profits, which I was very vocal about in this zone here, right? Where would you ideally like to start releasing your shorts? Up here? It was difficult, I'm gonna say this, but ideally, you like to release your shorts as we work down, right? You want to release your shorts lower, right? That's ideally an opportunity to do that. And of course, it requires what? Well, it requires us to go back up, right? Without a doubt. So we'll need to see some additional fundamentals from Tesla to push it up to the 400, which was mentioned today. It's great to say, well, $400 based on fundamentals. Some chartists are going to be eternally unhappy with Tesla. Looking at the framework here in terms of and guys, there's a lot of excitement around Tesla right now. It's easy to get behind the company with the Cybertruck. It's a pretty cool truck. Whether or not you're a fan of the parties involved, it's a pretty cool truck. Self-driving cars, pretty cool idea. It's kind of easy to work with the fundamentals and play without a doubt. And I'll just say this, without speaking too much on the issue, let's allow TradingView to do its work a little bit here in the background. Let's allow it to pick up on some chart patterning for auto chart patterning, if it will work now. There we go. Let's allow it to go ahead and give us a target for a minute, and I want you guys to assess if you agree or disagree. It's got the specific inverse head and shoulders here. We know where the specific additional orders are parked to this downside. We've discussed the specific pennant formation, which it's not showing, but we do have an inverse head and shoulders. I'll give that to it. Absolutely. So it's showing us, TradingView, the best they can come up with is showing us a 312 price target, right? What's that going to require for us to do? The 312 target is going to require us, and I'd ask you to go to the 4 hourly. It's a hot mover today, guys, up 6.15%. It's hot. Looks like Bitcoin is a little bit troubled. We'll talk about Bitcoin here in a second. But looking at this framework, okay, what we're going to be required to do is get up and over. Where is the target? Here, assess this, okay? Let me get into this. As I hope it doesn't change, TradingView. I hope this auto tool doesn't change. Let's say 311, okay, just like the group in California from way back when. 311. Dating myself there, that's fine. 311 is going to require what? It's going to require a breakout of what? It's going to require a breakout of this line of resistance. Yes, indeed. Okay. It's going to put you up and over this line of resistance. The one thing we don't want to do is be having this discussion. I promise. You know this. We don't want to be having this discussion on this bump and run wherein we are, hey guys, you can say it's irrelevant or there are other patterns in play. If you trade frequently, let me get this real quickly. Let me see what we got.
Up. Alert 4 hours green buy line.
4 hour green buy line on Bitcoin. That's essential. Hold on. There we go. Apologies for that. We have an opportunity on Bitcoin, looking for the fire sale, looking for the potential move to the downside. Would have loved to have gotten it this weekend, right? But what didn't we have on the auto detection function for Bitcoin? We just talked about, right? It was showing us a bullish specific falling wedge in this zone, right? And I said, well, you're missing the descending triangle. Okay, great case in point in terms of Bitcoin. Yeah, hello, TradingView, buenos dias. You got it. Looking at this, now it's calling this a falling wedge. Okay, falling wedge is supposed to be bullish. You've got some indication of a trade opportunity in terms of a green buy line on our 4 hourly. Without a doubt, that 4 hourly likes to hit. It likes to hit. Let's pay attention. Let's get into the details real quickly. Let's look at the 4 hourly on. Make sure we are on into Bitcoin. I've got it laid out big time. You guys see that. So we're at the pickup level, 4 hourly green buy line, just pushing into, and Bitcoin makes it famous. When you heard the announcement come through to me, what was it? Up, right? That's how we handle our alerts. Up. I know it was actually going down, right? But when you heard the alert come through on my phone, it was up. Meaning when I get the alert, when you get the alert, I want you to be reinforced with the probable direction given a deep dig into whatever level it has just come down to, okay? That's the way that we program the alerts. I want it to be just known for that. The 4 hourly buy line has been something that we've continually targeted in terms of trade opportunities to trade, okay? So the issue, we have a catch for hourly green buy line instead of a complete breakdown, okay? Instead of a complete breakdown, what's the saving grace of this morning? What would this have been for you? A breakout trade, correct? To the downside, without a doubt. Expectation to the downside. Now we can apply from the ascending triangle on Tesla this morning, if you're trading quickly, how to do this quickly versus everything you see laid out on the screen right now for Bitcoin. Okay, you got it, right? We want that specific price tool, that price range tool. Bam, we want about a 50%. I want to know quickly what's my max probability. Boom, in this zone. Okay. If you're flash trading on micro, you have more time on your specific larger time frames. Now, in terms of the specifics here, the most dangerous trade is the breakout trade. You know this, Bitcoin will eat you up. If you want to own a short, where's the best place to own a short? From up in here, please, from up in here, right? Our 4 hourly buy line just paid. You got that. Now, for someone who owns a short from the appropriate spot and just highlight the specific cap line feature, hello, highlight the cap line direct hit on the short level, you had 1.94%, 1.95% on this specific short alone. From the preceding level, fantastic. And we've seen this so many times in the last few weeks. Don't let me jinx it. The specific 4 hourly short 20 moving average has paid let me see this real quickly. Let me see if I can grab the right one just to talk about it. Hope you guys are doing really well this morning. Shout out to VIP. You guys are doing great. In terms of looking at this, 2.53%, that's a nice short. It took about 12 hours to do. The 4 hourly buy line engaged with what? Stop loss. Bingo. Right? Bam. Nice trade. But you're short engaging because it's going lower right now. That's your danger zone. You want to pre-position. When I say pre-position, you want to pre-position. Knowing, for instance, that our RSI, our stochastic, and our MACD are negative. Okay? That would be the cap line feature that you're seeing. Let's take a look. It's on the screen. Couldn't be too much easier. All right? The RSI, stochastic, and MACD are red. Bears are in control. Work it. Roll with it. Run it. Right? Yeah. And what do we see here, which is very nice on that 4 hourly, an exact hit on the specific RSI, MACD, stochastic level. bam, laser guided. You had to not want this trade. I'm telling you, you had to not want this. Market's giving it to you, the 4 hourly cap line, without a doubt. You had to say, I don't want that. I don't want it. I just don't need it. No, it's too precise. If you tried to get it and you didn't, and you're on BTCC, you let me know so I can talk with the jefes at BTCC, okay? Looking at this, that's a 2% move. It's not bad, right? And if you're short on a descending triangle, congratulations. Congratulations. Nice moves, both for the green buy line and for the descending triangle on the cap line. Congratulations. That's money looking at you. You guys know that. Very well done. Let's get back out into the framework of a bit of diagnostics. Yeah, well, good heavens. Look at this, 8 hourly. Just close enough, but not quite on that 4 hourly marker, right? You see that differential? That makes a difference. That's that 20 moving average. Just not quite there. Let me re-add in before I forget the specific Bollinger Band. And guys, the 20 is relevant. If you don't like the bands around it, don't worry about it. Don't trade them. But the 20 is as relevant as a 5 and 20 crossover, a standardized, big time standardized feature of futures trading without a doubt. And on Bitcoin, we're gonna note this near flat bottom here with the accompanying dynamics across the way on a smaller time frame. For instance, on the specific 5 moving average, and the question's going to be on your lower time frame. Now, this is not the big descending triangle, but we're seeing that fractal representation. You're getting a good idea here. If we're looking at a teardown here, we're at about 90% to target. So that's what exactly is interacting. And it's nice to see that 4 hourly green buy line, which did activate. You heard it. That's our fire and ice, which caught the bottom. Again, you're going to have to not want these, right? In terms of even contact with the cap line, you're going to have to not want the trade. You have to say, no, I don't want the trade. And that's okay. If you don't want it for the reasons that you've established, that's fine. But you're going to have to deliberately come up with the decision there and make the decision that I don't want that trade. And to the extent that, well, those trades haven't worked out. If it's the 4 hourly green buy line, I challenge you to look at the data. If it's cap line contact, I'll encourage you to explore and create more data for yourself, okay? In terms of differentials on time frames and levels of accuracy and consistency, I'll encourage you to find your favorite time frames, because I don't think that you can say about either one of those that they just don't work. I know that based upon empirical data, okay? So looking at this micro, again, this is on the 5 minute, and we had this double bottom, boom, which is a nice representation of what's going on the 4 hourly. When we see these macro, these micro to macro fractals, we pay attention, right? Nice re-hit at this level. Everyone knows there's downward pressure. I put, in terms of Bitcoin, I put the specific, what was it, the weekly time frame you guys have in the back in terms of some additional targets to the downside. Let's look at Tesla. Now, what were we thinking? Is going to be great on Tesla. Why? Because the guys here are the guys who got out of their position, let's say in here. It'd be awful to trade this flag, be real conservative. You're out here, right? And they sell out of Tesla. And it's like, no. It's like, what were we thinking? They're going to have to buy back further or buy back higher. And it's okay if it's a technically indicated pattern. This is the 4 hourly with some nice probabilities attached to it. But pay attention in terms of what we want to stay away from. And this could be another what were we thinking moment. If, based upon this specific indicated increasing volatility, this is the pattern I'm concerned about. Why? Because it gets us here. The majority of the times, a vast majority of the times, it's going to get us here to that level of resistance. And if you trade enough of them, you're not going to promise anybody that you're going to just blast off through this level. But getting back to this level of resistance, that is one you put in your pocket, your long-term skill set, trade pocket dynamic. And if you trade them enough, right? NVDA disappointed on that last week. Big warning sign. NVIDIA disappointed on this issue, is still on NVIDIA chart, still an upside target. Tough, NVIDIA, tough. Anyway, as we look at I have my own commentary on NVIDIA. I'll share it with you guys maybe in the back. In terms of level of resistance, though, that's the key we were looking at. What we don't want to do is enter this pattern here. Well, everyone's talking about a new and improved bigger, right? It's going to be a new and improved bigger what? inverse head and shoulders, right? We just want to catch these moves to the extent that we can lower with higher levels of exposure. And essentially, we'd like to expose less capital to risk, right? When everybody's looking to get on board, we want to pre-position to the best extent possible. So for those of you who have or did, congratulations with a tricky catch-up, with a tricky pickup, rather. Level of support, this required really for a draw through. And you guys know this is where Tesla will make you some money, but you have to be really, really appropriately guided in terms of just when to be bullish and when not. And it's good to be bullish on Tesla when she's down. You know this. We, in terms of the notion here, when Tesla was falling off the cliff, that's when I was like, guys, take a look at this. You know that. We're in a high probability pattern, a big move potential to the upside. That's why I brought it in the back, big time. It was falling into nothing. It was. And you had to be bullish and stick with it during this absolute pour down phase. But we caught it. Congratulations, anybody who has an underlying position in Tesla. And great news this morning in terms of the dynamics in play. That is why we trade. Let's see what we have here on And Indeed. What's traded? We know. This is where I start to say, what does the market want? It wants your time, right? Nice flash update in terms of potential patterning in play, in terms of what we're looking at. Rewatch the stream, please. If you know TA and you've known it for the past 10 years, I challenge you to rewatch the beginning of this stream and the way this pattern played out and learn what you can about the conversation in play. And if you didn't learn anything and you rewatch it, you leave me a comment that there was nothing for you to learn or consider. I don't think I'm going to get a single comment at all. And put a lot of people through this specific stress test. No, there was some good commentary earlier on about how to trade this, about how to apply your technicals. Please rewatch such. So we're seeing the specific return to preceding level of resistance, right? We had to take a bit of a break. And what else are you guys identifying here? As you look at this, as you just look at the chart, what are you identifying on Tesla? Why is it going up right now? Right now, why is this going back up? Is it because it engaged with orders here? No. What do you see about the dynamics right here as to why it's going up right now? And we'll end the stream on this. You guys know? Yeah. We have a what? We have a small lead in. True? True. What did we just cover on Tesla? Macro. You got it. Expansion and along the top, and I can redraw this almost on every time frame, but what am I concerned about? Increasing volatility. Capiche? You got it. Okay, we can go back to the macro if we want to on the 4 hourly. Look at this on the 4 hourly. Where do I not want to be involved? I don't want to enter here over the level of resistance. This is the 4 hourly. What's important? This part here is important. This expansion of volatility here marks the entirety of the expectation of return to resistance. Trade 500 of them. If this is Greek to you, learn Greek. If it's Greek to you and it's something that you think is just, that's okay. You don't have to pay attention. If you think it's Greek and it doesn't make sense, roll on. That's fine. We know these patterns. We know the dynamics and the empirical data over the last 40 years in the markets, and that's fine. That's fine. If it doesn't mesh well with you and you judge it as inconsequential, why is this going up to hit this level of resistance? It just is. We trade them enough, we know. Where don't you want to get involved? On the breakout. Boom. Correct? Correct. So, way to trade. Note that your order here on preceding resistance on Tesla engaged. What kind of trade was there? Flash trade, boom, to the upside, bam, bam. My preference, involve as much cash as possible. You guys got it. With as tight of a stop loss as possible, engaging as precisely as possible, make as much money as quickly with as little risk, and repeat. Okay, 8 to 10 second trades, I love them. High precision trades, I love them. You got to get there, guys, okay? But again, note the patterning in play on the micro. Great example in terms of the micro to macro. This specific patterning formation, we're looking for volatility and opportunity if we have the specific lead in and the bump, and we're looking for the run, and we just saw the trap on breakout, without a doubt. And what's the saving grace for anyone who misses this? Well, maybe we want a double bump and run. A double bump and run. You guys got it. We're in price. We can just have a lead in and a bump. Maybe we could get another bump before a run. We'll be looking at the dynamics in play. Essentially, always mind your parallel carry ups, limitations wherever you see them as a potential target to the upside for the bulls. Please rewatch this stream if you didn't watch the original, or guys, the intro here. I really encourage you to rewatch the stream. I'll cut it short so that you can do so if you didn't this morning. I want to shout out to all the VIP. I hope you're doing well. We'll be in the back and I'll post some additional charts. And if you caught some trades in the first hour of trading, congratulations. Hopefully we had just a real good time in terms of this upgrade by Morgan Stanley. Congratulations, Morgan Stanley. Congratulations for really getting on the Tesla boat. I tried to get you on the boat right here. The head of the local, guys, the head of the local office here. Now, I literally tried to get him on the boat here casually, lifting weights, no problem. Hey, yeah, you need to look at this for your clients. Nah, we're going to look at it up here. Congratulations. Hey, I got to give them a hard time. Huh? You guys are awesome. You're my preferred group to give a hard time to. No worries about it, guys. You guys go get them, and we'll be trading. We'll dig into the details, and it's going to be a great, great trade week. CPI on what, guys? CPI on. And you see this, where are we at the 15 second? CPI, pardon me, on Wednesday. We will be trading CPI. Looking forward to a great week, a positive week. Try and make your life positive. Try and make your trades positive. If you can get all that down, you're winning the ball game. And that's, guys, bravo, bravo, good trades today. We'll talk to you soon. Take care of yourself. This is London with Bitcoin Spike and VIP Trader. Take care. Bye-bye.